Hi there, traders. This is Brad Gilbert with FX Market Insight for Friday, the 14th of May. All right, now a few interesting developments along with the dollar. Now, we had the initial jobless claims. Now, this data came out and was corrected. What we saw was a little bit of convoluted price action as it sort of jumped up and down. Now, getting involved in this, second tier sort of release, if not anything, third tier, is problematic. Especially, it doesn't help when they print the wrong number and change it and amend it, and that sort of really screws things up. But one of the key things was the PPI data, right? Which is, I would add a bit more weight to the PPI than the weekly jobless claims, up 6.2%. All the numbers were strong, which goes a long way to showing that inflation is really sort of kicking along in the US. Now, producer prices, that inflation's got to flow on to the consumer. So you expect inflation to continue to go higher as we go forward from here. Now, higher inflation, you'd expect, the probability of higher interest rates to come into play. That would lead to lower equities, and we haven't seen that. Now, this is a bit of a tricky one, and you can see the Treasury is a bit mixed, even just after the reset of the data at the end of the Thursday in North America. You see the dollar index is sort of trading sideways. No one's ready to take it on. Let me just come back to this equity market. So the equity market up doesn't make sense with higher inflation, right? Because you'd think there'd be a chance of higher rates sooner than what the Fed's leading on. But as I sort of mentioned yesterday, we've been waiting for some of the Fed officials to come out and make some comments. Now, we've seen a couple. Federal Reserve Governor Christopher Waller Thursday said the Fed expects inflation to be well above the 2% target for a long time. For the next 2 years, it said the Fed would not raise rates until it hits excessively high inflation. And they aren't giving that secret away what that number is. And even the Vice Chair, Richard Clarida, said on Wednesday that weak job growth and strong inflation in April had not changed the central bank's plan to maintain loose monetary policy. So there's two guys straight out of the bat responding to those really strong inflation numbers. Now, so the Fed are doing what they can do, right? They're sort of maintaining their stance. They're holding their ground despite what the data is doing. And this is where you come back to the data or come back to the currencies. And as I said, you can see the dollar index here. The market's waiting for opportunities to get into this. I'd say they're even looking for a stronger dollar or even the possibility of it going down. But the data will suggest economy's heating up and we need higher rates, but they're sticking to their guns. Now, that doesn't mean the market's going to sell off. The market's holding its ground with the data, and they're waiting to see what else comes out. This is where today's retail sales figures add an extra layer of credibility to, you've got the industrial production numbers here, capacity utilization, University of Michigan sentiment numbers there as well. Retail sales, if all these numbers are gangbuster, the Fed is still going to hold their ground, but the market will start factoring in a change. And I think that's where we'll see stronger dollar through next week. But you know what? If all of this data is mixed or weak, then we may start to see it just sort of dribble off a touch. But everything's pointing to stronger numbers, inflation, retail sales, all that sort of stuff. So we're going to keep an eye on that. Now, just before I show the charts, keep an eye on these manufacturing sales numbers out of Canada. Right, we're starting to see dollar CAD move to the top side. Oil's falling. We've got strong dollar. I tell you what, a correction in dollar CAD is in order. We're starting to see just at the moment. Initial targets have got to be up around 122, sort of 70 at this stage. Keep an eye on oil. Oil falls. Dollar CAD should fit into place, especially if we get really weak manufacturing sales numbers out of Canada. Right. Ideally, you'd like to see strong retail sales figures in the US, but that's definitely on the cards. So just having a look where these pairs are, we've got the correction after the CPI. The currencies are just trading sideways. I still think there's an upward bias on the dollar, but everything has just gone. So after these major releases, the currencies move, then it gets to fair value, then they just start trading sideways until we get the next layer of information. And that's where we're at just at the moment. You can see sterling just sort of rolling over a bit. We had a bunch of sterling data out. Aussie, I wouldn't say it's on its knees, but I tell you what, Aussie and Kiwi sitting precariously at this point. Right now, if I just clear the drawings there, a lot of these currencies are at the crossroads. And what I mean by that is they are set to either just go up or go down. And with that is opportunity, right? Ideally, I like the strong dollar picture because it's easier to see what's happening with the data. But this is one of those good opportunities, and it's a shame we're almost running into the end of the week. This is why, back in the day when we're in the banks, we're like, it's a shame a week isn't like 10 or 12 days, because after 4 or 5, you've got really good control of what's going on with the currencies. And all we want to do is keep trading, because from here, like these currency pairs are showing really good signs. They are in the balance. They're either going to go up or down. This is where the macroeconomic data really comes into play, and your understanding of how the market works is absolutely imperative, right? So from here, retail sales, right? Industrial production, capacity utilization, all these numbers coming out, and there's a little bit of a gap between them, which is good. Okay, gives you a chance to sort of have a look at all of them. We want to see some clear activity. This is a sort of number, I think, really strong numbers. You buy dollars straight away or through these technical levels. Strong retail sales, you've got to expect, I would think, just a little bit of weakness in the equities. Bond yields, well, they're sort of a bit mixed, but weakness in those equities. We see the dollar block go down and the dollar pairs go up. That would be a nice trading situation to end the week. And then from there, if we do get strong US numbers, that can set us up for a strong dollar week all next week. Don't forget, we've just come through the first 2 weeks of the month. They are the busiest as far as macroeconomic data comes out, as far as macroeconomic data goes, I should say. And that gives us an opportunity to really trade many opportunities, because the dollar, once the dollar's in play, we've got direction, trading becomes easy. So that's the best way to play it. Right now, I can't see anything changing right now until we get to that North American session. That's where the bulk of the activity is going to be. All right, keep an eye on dollar CAD. All the other dollar pairs are in play. We're in the balance. The retail sales and this US data has the potential to flip the balance to either dollar strength. If it comes in a little bit as expected, drifting sideways, if it comes out, it'd have to be massively weak to turn the dollar around. I just don't see it at this point. All right, all eyes on the data, and have a good one and have a good weekend. Cheerio.